Hello, and welcome to our crop insurance update series. My name is Jessica Hamill, and I am a team leader on the crop insurance team for the east side of Missouri. Today, I am here with Allie Montz for the third and final part of our update series. Allie is an assistant vice president who just celebrated her 10-year anniversary as a member of our crop insurance team. She currently services customers out of our Nevada office. Southwest Missouri has had FAC soybeans in their actuarials for many years, so Allie truly is an expert in how they work on a policy. Allie, please tell us about FAC soybeans.
Thanks, Jessica. All right, let's get started here. You might start seeing some new crop insurance acronyms you aren't used to because starting in 25, double crop soybeans and grain sorghum are insurable in most Missouri counties. It was already insurable in a lot of southern Missouri counties where I'm located. However, it has expanded throughout the rest of the state. Those acronyms I mentioned you might start seeing are NFAC, which means not following another crop, and FAC, which means following another crop or double cropping. If you have coverage in place for soybeans or grain sorghum, you are now required to insure any double crop or FAC soybeans or grain sorghum that are planted. You can keep these two practices separated on different units by enterprise or by optional. That does need to be designated by sales closing, which is March 15th, so that is coming up upon us. If you are utilizing irrigated or organic, you must choose between keeping those practices separate or NFAC and FAC separate. You are not allowed to do both. You might be asking yourself, is it a requirement to prove your production in those counties where it has been added for 25? And the answer is no, it is not required to report your past production unless they have been insured through a written agreement. You will be able to replace your yields with the FAC County Variable T yield. It is important to note, however, that if you don't report any of your past history, you will not have any prevent plant eligibility. An FAC prevent plant eligibility is based on the highest number of planted FAC acres in the last 4 years, as long as double cropping has happened and in at least 2 of the last 4 years the crop was planted. So that is something important to remind yourself moving forward. Here you will see we've got a map of the NFAC and FAC final plant dates. So on the left, you're going to see your first crop final plant date, and then the late plant period for those NFAC soybeans is 25 days following the final plant date. The map on the right is going to be your FAC final plant dates, and then the late plant period for those FAC beans is only 15 days following the final plant date. As a reminder, you will lose 1% of your guarantee for every day a crop is planted past the final plant date. On the next slide here, we do have the final plant dates for your NFAC and FAC grain sorghum. They are the same. The late plant period is 25 days following the final plant date for this grain sorghum as well. On this map here, you will see a comparison of what the T yields look like for first crop and double crop soybeans. Where there is new FAC T yields have been established, it is approximately 80% of the first crop T yield for that county. And here on our last map, you will see that we have a comparison of what the yields look like for NFAC and FAC grain sorghum as well. And again, they are approximately 80% of the NFAC T yield. All right, Jessica, I'm going to turn it back over to you.
Thank you, Allie. FCS Financial is lucky to have a team of experts across the state that can help as new rules and regulations are announced. If you have questions about FAC soybeans, or if you would like a review of your crop insurance policy, you can find your nearest FCS Financial crop insurance agent at www.myfcsfinancial.com/insurance. I want to take this time to also remind you of a few other changes that are affecting Missouri. Beginning in 2025, organic producers are eligible for enterprise units. Enterprise units must be elected on your application, so if you would like that option, reach out to your agent. In addition, a change has been made to $200,000 reviews. Beginning this year, RMA will add indemnities from prevent plant, harvest losses, and ECO/SCO payments. This means that some producers could be pulled for an audit in the summer following harvest of that crop. If you receive a $200,000 audit, you should prepare your production reports, such as settlement sheets and bin measurements for the last 3 years. Since we are in tax time, I also want to mention that some insured providers are only sending 1099s for losses over $600. If you have questions about a past year's claim, reach out to your agent and they can give you total paid on that claim. RMA has issued new language in respect to minor policies. A minor can no longer share crop with any member of their household or an entity that contains a member of the household. In addition, additional documentation must now be submitted with a minor policy. If you are a minor with a crop insurance policy, please be sure to review your paperwork with your agent to make sure you meet the new regulations. We are anticipating a new option for corn and soybeans in the 2026 crop year that we believe will have a September 30th, 2025 sales closing date. If you are interested in adding additional coverage to your policy, keep your eyes out this summer for more details. Last, with cattle prices at an all-time high, I also want to take this opportunity to remind you that FCS Financial offers livestock risk protection insurance. If you are interested in protecting your cattle against a decline in price, please reach out to an agent. Once again, that contact information can be found at www.myfcsfinancial.com/insurance. Thank you for joining us for the third and final part of our crop insurance update series. I hope you've already had a chance to watch the first 2 videos on SCO and ECO insurance and new break changes. We appreciate you watching our 3-part series and encourage you to reach out to your local agent with any questions you may have.